Welcome to Unwrapped, your podcast for deep dives into on-chain protocols and projects, and of course, the BMX ecosystem.
Hey everyone, and just before we jump in, a quick reminder, nothing we talk about today is financial advice. Digital assets, smart contracts, they all carry risks. You could lose everything.
Absolutely. Risk is inherent.
Yeah, so this deep dive is purely informational. We're just here to help you understand the thinking behind Deli Swap. Please do your own research.
Thanks for that. So today, we're digging into Deli Swap. It's BMX's upcoming decentralized exchange.
That's right. Highly anticipated.
And the first thing people might think is, wow, another decentralized exchange. The space is packed.
It really is.
So why? Why build one now? Yeah. That's what we want to unpack today. The core problems Deli Swap is actually setting out to solve for you, the user.
Exactly. What are the pain points we're addressing?
Right. So let's get straight into it. In this sea of decentralized exchanges, what specific gaps or challenges did BMX see that really pushed for Deli Swap's creation?
Okay, yeah, that's the key question. We basically zeroed in on three main issues. The first one is really about the stress and, honestly, the inefficiency people face just holding individual blue chip assets.
You mean like holding Bitcoin, Ethereum, USDC separately?
Exactly, holding them in silos. When you do that, you often miss out on, riding the overall market waves. You're managing these isolated bits.
Which sounds like a lot of work, right? Constantly trying to time each one.
Totally. It's not just missed opportunities, it's the mental load. We call them naked assets.
A naked asset. Then.
Yeah, and holding them involves constant stress. When do I sell? Is it too high? Oh, it dipped. Should I buy more? People need stablecoins, sure, but they also want that crypto upside.
So it's that tension.
Precisely. And what wBLT does, and we'll definitely get more into wBLT later, is it bundles these key assets, Bitcoin, ETH, USDC.
Ah, okay.
So the overall movement is less volatile. Not crazy highs, but fewer scary lows too. Plus, it captures market shifts and earns rewards from BMX products. Addresses that stress directly.
Got it. Less stress, still participating. What's the second problem then?
The second big one is how liquidity providers, LPs, are kind of stuck in this cycle, constantly chasing temporary rewards.
Oh yeah, you see those everywhere. New farm, high APY for a week.
Exactly. Hundreds of decentralized exchanges, multiple chains, all throwing out different incentive programs, often for the same assets.
Right. How does anyone even keep track?
It's overwhelming. Yeah. It makes it really hard for a regular LP to just commit somewhere long term.
So they just hop around.
Yeah. Chasing the next shiny thing, a short-term campaign here, an inflationary reward there. Deli Swap aims to offer something different, a place where you can provide liquidity knowing it's built for the long haul, not just some temporary gimmick.
Okay, that makes sense. Sustainable liquidity. And the third reason?
The third major driver was really about deepening the utility for our own token, BMX.
Right, BMX already has staking, some fee routing.
It does, but Deli Swap's design is, engineered specifically to, let's say, turbocharge BMX utility.
Turbocharge, I like that.
Yeah, to really weave it into the core economic engine of the decentralized exchange in a much bigger way than before, building a more robust system overall.
Okay, so those are the three big problems. Individual asset stress, chasing temporary LP rewards, and needing deeper BMX utility. And Deli Swap's design is the answer. All right, so Deli Swap at its core is a non-custodial, decentralized spot trading platform. Big focus on capital efficiency.
Non-custodial, efficient. Got it.
And it's permissionless. That's important too.
Yeah.
Anyone can create a liquidity pool. Anyone can set the swap fee for their pool, stream incentives directly to LPs. No central gatekeeper saying yes or no.
Fully open.
Fully open. And the solution, the way it tackles those problems, really rests on two core pillars.
Okay.
Pillar 1, using wBLT as the universal base pair for absolutely all liquidity pools on Deli Swap.
Everything pairs against wBLT.
Everything. And Pillar 2, leveraging Uniswap v4 hooks, which is pretty cutting-edge tech.
Hooks? Okay. We'll need to unpack that.
Definitely. And one more critical point. 100% of the fees generated from swaps on Deli Swap, they get directed right back into the BMX ecosystem.
All of it.
All of it. For V1, we'll start with static pool fees, but we're already exploring dynamic fees for future versions.
Okay, let's dig into Pillar 1 first. wBLT as a universal base pair. For listeners maybe not super familiar, what exactly is wBLT and why is pairing everything against it such a game changer?
Right. So wBLT, it stands for Wrapped BMX Liquidity Token. Think of it like a vault token.
A vault.
Yeah, it essentially bundles Bitcoin, Ethereum, and USDC together into one single transferable token. The target mix is about 50% USDC, so half stable, then roughly 30% Bitcoin and 20% Ethereum, the blue chip volatile assets, so it's balanced.
Half stables, half BTC. Okay.
The really innovative part, the game changer, as you said, is how this simplifies and unifies liquidity across the entire platform.
How so? What does that mean practically for someone providing liquidity?
It means you don't have to choose anymore. Like, do I pair my token against ETH or against USDC or BTC?
Oh, okay. Usually you have separate pools, right?
Exactly. In most traditional decentralized exchanges, to get good arbitrage and volume, a token often needs pools against at least two major assets, maybe more.
Which fractures the liquidity.
It fractures liquidity, makes it way more cumbersome for LPs to manage, spreads things thin.
Right.
But with Deli Swap, because everything pairs against wBLT, you are effectively pairing your token against ETH, BTC, and USDC all at the same time, because they're all inside wBLT.
Well, okay. So one pool gives you exposure across the board.
Precisely. And that gives you two massive benefits. First, yes, you get that diversified exposure, half stables, half volatiles, much more balanced than just pairing against ETH, for example.
Makes sense. And the second benefit?
The second benefit is that you inherit the wBLT fee accrual engine.
What does that mean?
It means the wBLT part of your liquidity position, it inherently grows over time. Remember those fees from across the entire BMX ecosystem? A portion gets directed to wBLT holders.
Ah, so the wBLT itself is earning rewards.
Yes, passively. It auto-compounds these rewards. So you've got this built-in base APR coming just from holding wBLT in your LP position. And that stacks on top of whatever swap fees or other incentives your pool is earning.
Okay, that sounds powerful. A base layer of reward plus the pool-specific reward.
Exactly. Plus, wBLT itself is composable. You can use it as collateral elsewhere, pair it on other decentralized exchanges, deposit it into other DeFi protocols. It really expands its usefulness.
Very interesting. Okay, that clarifies wBLT. Now, pillar 2, Uniswap v4 hooks. You said this is bleeding edge. Explain hooks like I need it broken down.
Right, hooks. They sound a bit technical, but the concept is actually pretty straightforward. Uniswap v4 lets developers embed custom pieces of code, custom logic, that run during the life cycle of a swap.
So like little programs that trigger at specific points in a trade.
Exactly. Before a swap, after a swap, maybe during the fee calculation. This gives platforms like Deli Swap immense flexibility. We can build in unique features right from day one, and it gives us a huge runway for future innovation.
Okay, flexibility.
Yeah.
How is Deli Swap using this flexibility right now? What's the first big hook?
Our first major hook is what we call a fee conversion hook. And this is where the reward mechanism gets really, really interesting.
Fee conversion. Tell me more.
Okay, so remember those swap fees generated in any pool on Deli Swap? 97%, the vast majority of those fees are automatically, in real time, converted into BMX tokens.
Automatically converted to BMX. How?
It happens using the wBLT BMX liquidity pool on Deli Swap itself. So the active converting fees creates buy pressure for BMX.
Ah, clever. Constant demand built in.
Precisely. And then those BMX tokens, they are immediately directed to the liquidity providers of the specific pool where the swap happened.
So LPs get paid in BMX, directly reflecting the activity in their pool, not some generic inflation token.
Exactly. Real rewards from real activity paid in the core ecosystem token.
And how often do LPs receive these BMX rewards? Is it like weekly?
No, this is another key improvement. Deli Swap will operate on daily epochs.
Daily?
Daily, with the actual rewards distribution happening around 48 to 72 hours after the start of that daily period.
Why daily? What's the advantage?
It massively increases capital efficiency for LPs. Think about weekly epochs. If you provide liquidity midweek, you might get diluted by others coming in before you even see your rewards. Plus, the asset prices could swing wildly over a week.
Right, your unclaimed rewards could lose value.
Exactly. Daily epochs mean you get your earned rewards much faster, reducing that price exposure risk and the dilution effect. Much better for LPs.
Okay, so 97% goes to LPs as BMX via this hook, distributed daily. What about the other 3% of swap fees?
Good question. That remaining 3% of the swap fees is directed towards BMX stakers, but it's delivered as wrapped ETH, so wETH.
What happens then?
Well, the BMX stakers then have a governance role. They vote on how much of that incoming wETH, say 10%, 20%, or 30% should be sent to the BMX safety module.
A safety module. That's like an insurance fund for the protocol.
Exactly. It acts as a backstop in case of, unexpected events or losses. So stakers help decide how much to bolster that safety net.
And the wETH that doesn't go to the safety module.
That remaining portion is routed directly to the BMX stakers themselves, proportional to their stake.
So stakers get direct wETH rewards and they contribute to protocol safety.
Correct. And notice how the whole process works. Swap happens, fees are generated, all fees, well, 97% are first converted to BMX via the hook, creating that buy pressure.
Right.
Then the BMX goes to LPs, and the remaining 3% fee portion goes as wETH to stakers, partially via the safety module vote. It's all interconnected to drive value back to the ecosystem and the token.
That hook design sounds really powerful, creating demand, directing rewards efficiently. And you mentioned future potential, too.
Oh, absolutely. Hooks open up so many possibilities down the line. We're exploring concepts like rehypothecation.
Rehypothecation.
Yeah. The basic idea is that maybe the inactive portion of the liquidity in a pool could be automatically deployed somewhere else safe, like a lending market, to earn additional rewards for the LPs, passively boosting their returns.
So making idle capital work harder.
Exactly. And we're also looking seriously at dynamic fees. Imagine fees automatically adjusting based on market volatility.
So higher fees when the market's crazy, lower when it's calm.
Right. LPs could potentially earn significantly more during those high activity periods, better compensating them for the increased risk, while traders pay less when things are quiet. Hooks make these kinds of sophisticated mechanisms feasible.
Okay, this is all starting to paint a really clear picture. Let's bring it home. What does Deli Swap actually mean for you, our listener? Whether you're thinking of being a liquidity provider or you're already staking BMX, what's the tangible payoff?
It really boils down to sustainable, real rewards generated from actual activity. So for liquidity providers, it's this powerful dual stream of value we talked about.
Dual stream.
Yeah. Stream 1, you get BMX tokens from that 97% of swap fees in your pool, directly tied to trading volume. Real usage equals real rewards. Stream 2, the wBLT side of your LP position is constantly growing passively from those ecosystem-wide fees being auto-compounded into it.
Okay, so BMX from swaps plus growth from the wBLT itself.
Exactly. That wBLT growth acts as a kind of buffer, helping to offset some of the inherent risks of providing liquidity, like impermanent loss. Plus, remember the permissionless incentive streams. Other projects can come and add their tokens as extra rewards directly to your pool, transparently. No shady bribes.
Multiple layers of potential rewards for LPs then. And what about BMX stakers?
For BMX stakers, it means a brand new source of real rewards paid in wETH, coming directly from Deli Swap's trading activity.
On top of the existing rewards they get.
Yes, this is an additional wETH stream on top of what they already receive from other BMX products. Plus, stakers earn multiplier points, which boost their share of all these wETH rewards even further.
And they retain control.
Complete control. There are no lockup periods for staking BMX. You can stake or unstake whenever you want. Full flexibility.
Now, you've mentioned zero emissions a couple of times. Let's really hammer that home. Why is that so important for the sustainability of all this?
It's absolutely critical. Zero emissions isn't just marketing speak. It's baked into the core of BMX. The BMX token contract itself is renounced.
Renounced means?
It means it's locked, final. No one, not the team, not anyone, can ever mint new BMX tokens, ever. The supply is fixed.
Okay, so all rewards have to come from somewhere real.
Exactly. All rewards, whether they're the BMX for LPs or the wETH for stakers, originate from real on-chain activity swap fees, platform fees from other products, etc. They are generated, not printed.
So the system pays for itself through usage.
Precisely. It means the rewards are sustainable. When the market is busy and Deli Swap sees lots of volume, rewards will naturally be higher. When things are quiet, they'll be lower. But crucially, they are always real, earned rewards reflecting actual economic activity. This whole system is designed for the long haul, not based on inflationary tokenomics that eventually collapse. It builds trust.
So wrapping it all up then, Deli Swap sounds like it's much more than just another decentralized exchange popping up.
Definitely.
It seems designed from the ground up with sustainability and long-term participation in mind. It uses these innovative tools like wBLT as that universal base pair and the flexibility of Uniswap v4 hooks, all to deliver real, earned rewards directly back to users, whether you're providing liquidity or staking BMX, and all built on that rock-solid foundation of zero token emissions.
You've got it. It really embodies that core BMX principle. Capture real value from real on-chain activity and route it back to the users, back to you, transparently and sustainably. It's a really exciting step forward, we think, for the whole BMX ecosystem. And honestly, we're just thrilled for people to get their hands on it and experience it.